Hello, hello. I am so sorry. Yet again, I am new to OBS Studios and I have recorded an entire live session talking to myself. I just completely finished an entire live session. I am 50 minutes late. That's why I was spent the last 50 minutes completely talking to myself like a donkey. So I'm so sorry. I started at 8 p.m. sharp and I just was spewing to myself. So bear with me. I am overall new to the YouTube and streaming world. I'm just trying to help people get further educated. So I am so sorry. Please feel free to join in and leave me a comment about how I'm such a donkey if you would like. I do want to ask, because I always ask at the end of the video and some people don't make it to there. Please like and subscribe. It really helps me grow this channel. We're really new. I only have about 8 subscribers at this time, but I'm handing out gold and helping people with their trading and really advance. So doing little things like that is a great way to say thank you to me if I'm helping you advance your trading, right? So I want to discuss tonight how I got cooked in the marketplace this week. Ooh. And what's my plan of attack for the rest of the week, how I'm going to go about my risk management, etc. So I need to pull up my notes that I had already closed, thinking that I was finished with my video. All right, we're good. So what happened in today's trading session for me? Regardless, reviewing last night's price action, right? I saw the overnight. We had an open high, very bullish during the end of London session. We pretty much accumulated right through Asia and into London. Then we pushed higher right to, this is the daily charts volume profile. We pushed directly up to the value area high. Inside of here, I am sure that you will find a TCP execution strategy model, the Craveiro Protocol, to have taken a short to value area low. From value area low, we do not have a higher time frame CVD divergence, but we did have lower time frame continuation divergences within the session, right? So where I went wrong, I had gotten the intention off of looking at new day opening gap. If I am to flip from electronic trading hours down here to regular trading hours, right? We've got ourselves a very healthy new day opening gap. Okay, let's properly mark that. And at the time, when I looked at the previous session, this was, so where this VWAP is resting within this line is going to show you, at that time where it was, okay? So let's go back to electronic trading hours. And let's look at even just the overnight session. So when I have the overnight session on screen, right now this is showing price is pretty much balanced, okay? And we have this huge draw directly underneath it paired with London lows, Asia lows. True day open is a great place of rejection to see bullish price action, but we didn't even tag it. So in that stance, London was dancing off of true day open, pushing higher. We went to value area low. I just made very poor judgment. To me, this is incredibly obvious that if we are to put I like to have a profile for the entire day opening from 17 to 17 military time. That would be right from open to close. And then I like a session volume profile as well. And I think this paints out a fantastic picture of supply and demand, right? Here we have candle body low, candle body high. Even if you choose to go wick low. And we called this our area of demand. What did we have? Price pushed up, dipped back down into our area of demand in this session value area low. And then this is the daily profile value area low. So I personally would have put my area demand here, sandwiched right in between those two. And what do? Boom, tap, bullish SMT. If I go to a lower time frame, let's say the 1 minute, what do we have? Bullish CVD. And I can absolutely guarantee you, because I was staring at it and watching it happen, and I have no idea why I didn't execute on my own strategy. I was just so zoomed out and being foolish. We had volume weighted average price now resting up here, so it's showing that price is in a discount and above is a premium. So we are considered discounted on the session. We retraced back into value, the area of demand. We saw bullish displacement. We saw participation from buy side step in, and sellers could not push price back down. So in this case, I can't, this is too far back now that we are in the next session. 6 p.m. opened as happened. I'm not able to see the imbalances of this candle anymore, right? So the trade that I really should have taken, if my mind was clear here, is entering, say, off of this candle when I saw price respect these imbalances, and I would have most likely had either my stop at this low, which is still, that's a really large stop. This is a 1 minute candle. I would have been on 32nd for execution. So let's revisit this. Okay. I would have seen this first candle open up. This would have had imbalances coming off of it, relative equal lows, showing that there is a large wall of either limit or market buy participation right at that level. The imbalances that would have stuck off this candle could have been right from the bottom. So let's say in a hypothetical we went there. Now we have an 18-point stop loss when this candle digs back in and respects those balances and is holding them. And we see a delta flip. I also have an entry model video and a volume profile video. If you're not familiar, I do really recommend viewing those. Ignore the volume profile in the back right now. We are just staring at price. So we had bullish CVD divergence on a higher time frame at this level. We're now on the 32nd for an execution and a tighter entry. Target would have been either point of control or value area high. And what do we go? In this case, we do make it to the value area high. It would have been this is a 30-second time frame chart too. So let's go to 1 minute. You would have hit yourself a 10R in roughly, that's 2:30 p.m. So you'd have been sitting in this all day. At the point of control, when we start getting strong reaction back, I would have closed 7R. Fantastic, right? This week, I am down about 1.25% across my 3 accounts. I have a live funded account with Take Profit Trader, and I have 250K fundeds with Tradeify, and I am down just about 2K on the week, which equates to 1.25% in 3 days. I'm not sweating it. When you're hitting banger trades like this, I just need one. That's all I need. And then I will be back to a profit on the week. I can very easily end the week in the green, although I'm going to be a bit reluctant based off of the fact that I'm making poor judgment calls, okay? I want to go over the trade that I took today, and I can't believe I just deleted the drawing because I was talking to myself for, this is like the second week in a row that I've started a stream and sat here talking to myself. I'm so sorry. I will get better at this. I am an amateur. Totally rag on me. Doesn't matter. But so today I had clouded judgment. It really wasn't clouded judgment. It was pretty good, right? But what do we have here? If we were to take shorts, sticking to my own teachings, the real area of distribution that I would want to actually take shorts out of would be in between session and daily volume profile. This volume profile is, of course, adjusting throughout the session. So at this current time, these levels aren't going to be perfectly resting here, but they wouldn't be too far off either. So what was on my mind when I decided to take that short, right? I was looking to see this end dog, the new day opening gap, get filled. That was also paired with London lows and Asia lows. We obviously weren't bearish on the day. This was just a poor judgment call from my end. No trader has a 100% win rate and is perfect. If they tell you they are, they're an effing liar. So in this case, I had believed that the draw and area of rejection was going to be this bearish 15-minute gap. Okay. And I am messing up. Let me fix my charts. There we go. Okay. So I had seen price in here take off. I was a fool and didn't take my own entry model directly out of this area of demand here, only at perfectly at 10 a.m. That's my time to shine too. That's my favorite time to take a trade in the New York session. I just made a poor judgment call. This was the trade I wanted. I would have wanted to take a long out of there, catch myself a 7R, potentially stop for the day, or go in with very light risk and try and build my session. But I waited to potentially short out of here, and I did take a short. And at the time, I'd gotten myself up to the point where I was looking at my Trade Syncer account on my phone, and I was pretty much halfway out of my drawdown when the candle was wicking down here on the week. And I was very confident that my trade was going to play out. And Uncle Donnie Trump got on TV, and that didn't work in my favor. I ended up taking a fat break even. So let's go on to a lower time frame and discuss, after reviewing, what really should I have done to have not gave money back to the market. I have found myself this week, that's why I'm stepping back. I feel as though I am not trailing the way that I preach to not give money back to the market in my normal practice, and I've become a bit zoomed out. I am almost breaking my own rules. Not good. Don't be like me. I don't break my rules a lot. I'm very strict, but I am a dynamic trader. The whole thing is to react to price and not try and predict price. So in this case, I did react off entry, but I should have known with this strong of bullish PA in the overnight, and London took off, but pre-market was so bearish as well, and there was very large short participation stepping in the pre-market. We pretty much chewed the gains from the London session. I saw New York open high. I had assumed that we were looking at an open high, low close scenario, which perfectly would have lined up with my initial analysis. We didn't get that. That's perfectly fine. I was wrong. But what I took was I was staring at this 15-minute gap, and here we have a 1-minute bearish CVD divergence. I also believe that on a 5-minute time frame, yes, we had a 5-minute bearish CVD divergence. So that is one of my, it doesn't need to be a 5-minute, but we need a bearish CVD divergence with the TCP model inside of a key level. It can't just be anywhere on the chart. So in this case, we were inside of a 15-minute fair value gap, close to value area high, anticipating reversal from this level. So we had, I can't remember if I think, it was right in this leg. So trade, you turn volume footprint on, right? This is where things start to look crazy. I'm going to hide the session volume profile for a minute just to keep this not so clustered. Now it is incredibly extended. At the time when you would be monitoring this, that volume profile would be farther to the left with visibility on price, but where price has continued through the session, now the volume price profile just kept extending over. So in this case, we had hit our key level, swept highs, dropped back down into our key level, CVD divergence. We were showing that buyer participation on the cumulative volume delta was regressing throughout the session, right? They were beginning to become exhausted. We saw multiple divergences. They were getting respected and disrespected in some cases. But I figured that we were coming to the end of the line. I had already missed my opportunity on that beautiful long this morning. So this was where I was going to try and get my get back. And right here we have bearish CVD divergence. We have a bullish candle close with a red delta. So we have a delta divergence, meaning more seller participation within that bullish candle than buyers. That is another sign of exhaustion. And then I would love to see, which I got, my model, I should have entered all the way up here. We have displacement, where a volume footprint candle closes with at least 3 levels of imbalance. In this case, we had 6. That these highlighted settings on my volume footprint charts are for 500% imbalances. There is 5 times the participation of sellers at these tick levels than there are buyers, essentially bid versus ask, right? And not only that, the candle closed below the point of control, holding these imbalances with a strong red delta. Okay, that is enough volume and participation for me. Is this at an ideal time frame? No, this is lunch. But after a lot of experience in the charts, I can tell you that I've had some of my best order flow trades over the lunch period now. In SMC, a lot of traders will enter a position in the AM session and try and hold till the afternoon. I know that might not be the case. There's a lot of guys that do 1-to-1s, 1-to-2s strictly, but there are some that try and catch these large plays, and they will try and hold till end of day, hoping to see a continuation. And lunchtime, when they step away from the computer, is when they're going to get smacked out, because there is a little resistance in the marketplace, and large money can run free. It doesn't happen every day, but it happens quite a bit. So in this case, we have all 3 confirmations we need: CVD divergence, delta divergence, volume footprint candle close right here. This right here, you would have seen this candle pushing up, red CVD, but the imbalances are getting held, right? They're getting completely respected. Buyers are struggling to take back control. There is large selling pressure here. So my TCP model is to enter here. With you can choose to go to this high if you would like, which is still a very, very close stop. You're talking about 4.75 points. I like to place my stops. In this case, I probably would have gone to this high where it's so close, but you could have gone to the top of the imbalances and had an even larger position size, because the shorter your stop, the more contracts that you are essentially going to have to maintain a risk to reward ratio. So right here, 45 cons at 250 risk. And now if I was to cancel that order and extend up to this high, I would have 26 cons with the exact same amount of risk. So double the position size, right? And where should I have gone with this short? I missed out like an idiot, and I should have closed on a great trade. So back to setting up our volume profile. So even if I was to have taken this to, I'm going to zoom in. If I was to have taken this down to the session point of control, which is this yellow line through this volume footprint. Sorry, it's extended so far over. That's because the session has continued. This would have been a 4.68R trade. We are talking about $1,200 on 250 risk in we have 1 minute candles. 1, 2, 3, 4-minute period. Oh, I'm sorry. 5. One more candle to get to the destination, right? 5-minute period. If you wanted, you could have closed 24 and left 2 runners. You could have closed 20, left 6 micros on as a runner, and it's a completely risk-free trade now. You could have brought your, you could have trailed your stop down to these imbalances, hoping that it would held. In this case, it wouldn't have. You would have got stop back out, but it would have been 4 profits. You wouldn't have been losing. You're absolutely capturing. So the trade that I decided to take, I was off my normal game. I've had an absolutely beautiful month. Can't complain. But I had taken re-entry somewhere in here off of, the next, I started seeing trapped longs again. Whereabouts did we have another? I was pretty honed in on the 30-second, and this probably had a lot to do with poor judgment, right? I think it was right here. I had seen a continuation play option. I got another bearish CVD divergence, and I had my confluences. We did disrespect it, but I'm sure that when you're looking previously with volume footprints on TradingView, let me tell you, it's pretty garbage. I'm sorry. But somewhere in these levels, we had seller participation, large displacement, volume footprint imbalances. One of these candles did have a delta divergence, meaning on my footprint candles, there are these red-green boxes, and on a bullish candle, we had a red delta. So I'm anticipating continuation shorts. I had somewhere within this range, entered short. I had stop, I believe, was up here initially, or at that high. It was one or the other. I was targeting value area low for a partial, and then I was going to leave runners to hopefully go down to Asia lows. And foolish play, looking back, I mean, it would have been beautiful to have had it pull out. This can't be right, because I had like 30 R return on the trade when I was looking at it. I believe I had actually gotten in probably somewhere, I don't know. It wasn't perfect. I'm so upset that I deleted the drawing. I had this pretty presentation before I realized I was talking to myself on camera for 50 minutes. I'm sorry. But what happened was I went into the green. I went all the way down to, I was looking at my trade sinker on my phone, and I was looking that I was already halfway out of my drawdown for the week within this one trade. And instead of capturing those gains, I let Uncle Donnie Trump hop on TV and reverse this back bullish, and I ended up taking full break even. So no loss, no gain. I took a small light loss on a different trade this morning, I believe, but it was like less than $200 or $250 across all 3 accounts. My main losing day was yesterday. I lost a full 1%, and today I lost an additional 0.25%. I was very tight risk today, and I have chosen to sit Asia session out. This is 30-second, so that is incredibly, I just want to get down in there for entries. I'm not actually monitoring price at those levels, but that's where I'd gone wrong. If you are not familiar with volume profiles and how I use them in our live trading sessions, I do have a really great video in the SMC Meets Order Flow playlist. You can find that in the Discord. You can also find that on my YouTube channel. And there is a what is a volume footprint profile video. That's a great, I think, educational video into how I use them in my day-to-day, a session profile versus a daily profile. And I also have a video on my TCP execution strategy, my entry model. So overall, how am I going to manage risk going through the rest of the week, right? Because now I am down. I've had a lot of green weeks. I really can't complain. Like I had said, I'm due for a red week. When I used to do a lot of journaling through my trading, my worst weeks were always weeks of FOMC releases. I was saying that today in the live, and I was like, I don't know why I'm being so foolish. It's almost a little comical at this point, but it happens. I am not perfect. I am human. I make mistakes. I am not the best trader in the world. I think I'm a very good trader, but there are tons and tons and tons of traders out there, and I am not the Wolf of Wall Street, even though I aspire to be. So I'm not even going to take any trades in this session, but how I'm going to manage risk going through the rest of the week. I'm not necessarily going to risk down, right? And the only reason that I think you shouldn't risk down in times of drawdown is because if you risk down and size down or do anything normal than what you already do, I think you should just be far more discretionary on your week and how you trade. You don't want to dig too big of a hole that it's really hard to climb out of. If I hit for one trade of my normal position size, I'm going to be in the green. I will wipe out all this drawdown and I will be in the profit on the week. And so if I use large discretion and I'm careful in my entries and I'm not just flashing off or marrying a bias based off of a new day opening gap, which I think was pretty foolish, I should have noticed that immediately at open, we had obvious shorts in the pre-market session, but then we had large short absorption right at open. Order flow had flipped right here. Large buyer participation was stepping in at this value area low level. It was obvious that this was considered a discount for the institutional community and large money players, and they were in longs, and that's where they were going. So beautiful long 7R from this area of demand that I have very clearly mapped out right to the point of the control. And that was the trade I should have taken today. And I feel as though a lot of days, that's where my mind would have been at. But even this morning when I'd hopped in the live call with the guys, I'd said that my son had us up really, really late last night. I have a young little boy who was about 2 years old, and he decided to start screaming up a storm at about 3 a.m. So I was incredibly exhausted, and I was running late to my own live trading session as I'm all off today. Even I'm 1 hour late to my own YouTube live session. And you know, days like that, it's pretty known. If you're a little foggy in the head, it's probably in your best interest to just stay off the charts in reality, right? Those don't tend to be good days. Look at me today. I got myself, and that's fine. I'm okay with that. We all lose. So that's going to be my approach for the rest of the week. If anybody has any questions or anything at all, one, please like and subscribe. Again, I really, really appreciate it if you were to do so. And if you have any questions, feel free to comment below. If you have topics you want me to cover in upcoming videos, I'm more than happy to. You can definitely hop in the Discord and suggest those in the Discord. The link is in our bio. Or you can feel free to just comment directly on the videos, and I will answer your comments, and I will definitely cover your topic in one of our upcoming sessions. I do these every Wednesday night at 8 p.m. And we are a slow growing community. Week by week, I have a little bit more participation, I like to think that I'm really handing out some gold information here, and I'm watching some traders really elevate their game. I've one young man in our group that I am so proud of. This kid has managed to pass 3 evaluations using my execution strategy this week. He has gotten himself $150K in funding on top of what he already did, and he was smacking 10R trades, 8R trades, things of that nature. So David, that's you, buddy. Super proud. Keep up the great work. And I have a ton of just fantastic traders in there that are really progressing. Everyone that's in the community, I love you guys, and I love the activeness in the live trading floor. So I hope to see any new viewers in there as well. I'm trying to build an absolute community of savages. I'm going to wrap this session up. I know this really wasn't as long as normal, which could be a good thing for you guys, but I don't want to drag this out too late into the evening. So I really appreciate anybody that has decided to sit through this, and please carry on. Good luck with your trading, and thank you for your participation. Have a great rest of your night.